These are the top 5 stocks to watch for next week. We're going to be opening up with Tesla reporting earnings this week. We also have some other really great companies. Tesla is doing pretty good in the past, 5 years. Overall, the trend has been up, but as a lot with these other stocks, the market has been in the bear market, so a lot of stocks are down. So we have to keep that in mind, which is why Tesla's down quite a bit from $1,200 per share to $700 per share. So if you're looking to pick up some nice Tesla, $700 per share is going to be a pretty sweet. So that's what's up with Tesla. It's a pretty volatile stock. Keep in mind the past year, lots of ups and downs. But overall, Tesla, a very great electric vehicle company, and we all know that eventually we're going to be switching to a ton of electric vehicles. That's where the future is headed. Next stock on our list is going to be Netflix. Very, very cheap stock. Netflix has not been doing well. As we can see in the past year, it's down almost 65%. So we do have to keep in mind that this stock has not been doing well, from $700 per share to just under to $190 per share, which is pretty insane. In the past 5 years, it is up, but at its peak, it really is a huge decline. All of these gains has been eliminated. So if you do love Netflix, Netflix is trying to bring back some of their services with a cheaper plan, which is going to be around $5 a month, but it is going to place some advertisements on your shows and movies. So that is going to try to attract some people with a lower budget, and try to get some users back onto their platform. So Netflix, it is looking promising. It is at a very cheap discount right now at the stock price. So if you want to make a little bit of a gamble, buying some Netflix could pay off pretty big in the long run, because Netflix is still pretty popular. But the downside is that they don't really have a lot of shows and movies on rotation that a lot of people want to watch. And then next stock on the list is going to be Snapchat. Snapchat is also a pretty volatile stock. It really hasn't been doing well. A lot of these other social media platforms, especially like TikTok, are really taking over. So Snapchat, it's been a decline. If you really want to buy the stock, you can. Snapchat is pretty popular. And if you want to take a big gamble, just like Netflix, you're getting shares at a cheap price. So you could either buy some options, you could buy shares. But overall, if you do think it will make a comeback, Snapchat is definitely a great buy right now at $13.58 per share. And same goes for Twitter. It's down 45 in the past year. Twitter has not been doing well. It is a pretty flat stock overall in the past 5 years. Generally, the trend is slightly up, but Twitter is not. It's just like Snapchat. If you do believe in this platform, then go ahead. A lot of people still use Twitter, but as far as advertisers, they really haven't been doing very well. A lot of companies have cut back on advertising just because of how high inflation is. So we do have to keep that in mind for Twitter and Snapchat, that the revenue is not really as good as it used to be. And the last stock on our list is going to be American Airlines, which also reports earnings this week. American Airlines, it isn't doing too well. It still hasn't recovered back to its highs before the pandemic, which was just under $30 per share. But if it can do that, you're seeing a double return on your investment. Airlines are definitely in a tough spot right now, especially with a lot of variants for the coronavirus still floating around there. People are still a little bit skeptical of traveling. But overall, airlines are definitely very crucial to commercial travel. So it is going to be a pretty solid pick, in my opinion. Not only American Airlines, but United Airlines as well, which also reports earnings. So you could just buy shares of that company as well. So that's about it for this video. Thanks for watching.